It's your daily crypto news. It's Tuesday. It's June 4th, 2024. My name is Matt, and this is news in the crypto space. Hence the name, Daily Crypto News. I know you don't want to hear me talk because you have about a minute or 2 minutes of ads before we even get into the news, but I am going to tell you to make sure you subscribe to our Substack at DCN Daily Crypto. Subscribe, $5 a month. You get extra content. We're launching a new show here really soon. We're just working out the details of the format. I think it's going to be pretty cool. I'll tell you more in the future, but you'll get that content too unlocked first if you're on the Substack. We have articles. We have my political rants and ravings, so please follow us there. And if you want to subscribe to us on Twitter, we also put articles about your favorite, or maybe not favorite, meme coins, shit coins, and other articles as well, plus our news tweets. Thank you to all of you for listening, and thank you to all the team that helps us out. Let's get into it. This is an old piece of news. It's from last week, but I wanted to cover it. Actually, I was asked to cover it in my thoughts about it. This is about the Staff Accounting Bulletin, SAB 121. That is a separate bill from the FIT 21, the Financial Innovation Technology for the 21st Century Act. And the Staff Accounting Bulletin is a guidance from the SEC and telling banks and companies how they could custody crypto, and namely Bitcoin. Put this guidance out, and the House of Representatives and the Senate, they weren't happy about that, because if you're going to make guidance, well, guidance is one thing from the SEC, but their guidance is basically enforceable law, and the House of Representatives, Congress, is sitting here like, wait, if laws are being made, it's not coming from this regulatory body, it's coming from Congress. Congress people make laws, not the SEC. So anyway, they passed a bill in the House to repeal the Staff Accounting Bulletin 121. It passed the House 228 to 182. They called it a bipartisan vote. Not many Democrats jumped the line, but there are some. And then it went to the Senate, where 12 Democrats hopped over the line, and it was repealed 60 to 38. And after it goes through Congress, the House and the Senate, it goes to the president's desk, and the president gets to sign it into law, which in this case would be repealing the SAB 121, or veto it, saying, guys, we're not having it. We're not having it. So in this case, a veto came. And President Biden said this Republican-led resolution, remember I said bipartisan before, but he says Republican-led resolution, would inappropriately constrain the SEC's ability to set forth appropriate guardrails and address future issues, limiting the SEC's ability to maintain comprehensive and effective financial regulatory framework for crypto assets would introduce substantial financial instability and market uncertainty. And as you can expect, the crypto space was not happy with this decision. I'm not happy with this decision. And a lot of people in the crypto space are looking at it like, look, this veto came right after Trump was convicted in New York of 34 criminal counts. And why is that important? Because for a couple weeks before that, the crypto space was looking at Donald Trump and, of course, RFK Jr. positioning themselves as pro-crypto candidates. A bill passed through Congress saying that there will never be a Fed-issued CBDC. The FIT 21 Act passed with 71 Democrats hopping over the line, supporting the FIT 21. And it looked like Democrats were kind of getting to the point of, hey, you know what? We're going to support crypto. Reluctantly, but support crypto. And so the crypto space sees this veto as, wait, so Trump is convicted, and you think that the ball is rolling, that this convicted will lead him to jail and people will turn on Trump, so therefore you don't have to support crypto anymore. Basically like a flip-flop, saying we were going to go more toward crypto innovation for a while there, but now that we don't have to, we're not going to do that anymore. That's what the crypto space is thinking. Here's my opinion. It doesn't look good, right? It doesn't look good. My opinion is probably more just about basic management. See, the president in the executive branch, he places many people at the head of these, departments. And Gary Gensler is Joe Biden's pick to head up the SEC. And so if you're a manager, say if you're a general manager of a place and you have multiple managers in different departments, or you're a CEO and you have your directors and so on and so forth, and they're making decisions, to veto a decision that they made basically says, I don't trust the thing that you're doing. Now, of course, from a crypto space and looking on, we go, yeah, that's exactly what you should have done. You should have not vetoed it and should have repealed their SAB 121, their Staff Accounting Bulletin 121. But from a management and an administration point of view, I think that it's probably more simple of him just going like, this is my guy. I put him there to make decisions. Am I going to allow him to make decisions or not? Do I trust his direction? Do I trust his leadership? And if I want a cohesive administration, I have to do that or replace these guys. And I don't think he's ready to replace Gary Gensler, especially in an election year. So he's going to basically stand with this dude. My dude made a decision. I'm going to stand with you. That's kind of what I think it is, more so than anything else. Maybe I'm wrong. Maybe this is still an assault on the crypto industry. However, FITS 121 did pass the House. 71 Democrats hopped over the line. And when it goes to Joe Biden's desk, let's see if that veto pen comes out. I don't think it will, but I think that veto will basically solidify the administration's approach to crypto. Chief Financial Officer of the news outlet, the Epoch Times, has been arrested and charged with alleged involvement of a $67 million money laundering scheme involving cryptocurrency, which I just want to go back and say involving cryptocurrency is a very important word, involving cryptocurrency. Bill Guan, the CEO of the Epoch Times, is accused of orchestrating a plot in which the Epoch Times Make Money Online team used millions of dollars in cryptocurrency to purchase illicit funds, including the proceeds of fraudulent obtained insurance benefits that had been loaded into prepaid debit cards. So I just want to say that they said insurance benefits, prepaid debit cards, and then they also say that claims of the proceeds were then laundered through Guan's personal bank account, which is a fiat bank account, and cryptocurrency accounts, and the Epoch Time accounts. So cryptocurrency is involved, but it seems as though they're writing about this to say cryptocurrency was involved, but it's not the only means of money laundering. It seems like there's a lot of things going on here. So they did so much money laundering that the media firm's internal account showed a 410% year-on-year increase in annual revenue. Maybe a bit much. The Epoch Times, by the way, is an international multi-language news media company that publishes both online and in print, and it was founded in New York in April of 2000. It's known for its anti-communism stance, particularly against the Chinese Communist Party. One of my favorite stories of the day, and this is from yesterday, but this is still really interesting, is that Keith Gill, better known as Roaring Kitty, may be dropped from the retail stock trading platform E-Trade. E-Trade is owned by investment giant Morgan Stanley, and it's growing concern about potential stock manipulation around his recent purchases of GameStop stock. So Roaring Kitty, Keith, Mr. Kitty, he holds around $200 million worth of GameStop shares and call options. He posted it online. Basically, he made a purchase, he posted it online, and then number went up. The employees of E-Trade saw that he purchased call options before the tweet, and that Gill's trades likely generated profits thanks to the stock move his tweet generated, according to the Wall Street Journal and according to the people at E-Trade. Basically, what they're saying is that because Roaring Kitty is, a person of notoriety these days, and that he made this purchase and then posted his purchase and his hodlings online on Twitter, that it fueled the market and it made number go up, made him $85 million in a day. I couldn't find the meme that I found the other day, but I thought it was really cool. It was Kitty and Nancy Pelosi, and the meme said, posting your positions on Twitter is considered illegal and market manipulation. Trading on insider information while sitting in Congress is totally legal. People are also calling out that the flipping is happening and that Kitty's net worth is going to surpass Pelosi's. Roaring Kitty's net worth is around $289 million, while Pelosi's is around $245 million. That is so much money. That is so much money. By the way, I thought it was interesting. I went to go see Furiosa the other day, and I always go to the AMC movie theaters over here, and they're up bigly, by the way, over the past week or so. And this is the first time, and even though I consistently go to AMC, this is the first time that I saw it there. They are putting a commercial before their movies for AMC saying thank you to our stock buyers, our shareholders. And I thought that was interesting because AMC is in business because of this meme stock rally, and they're thriving because of that. By the way, they have great deals for movies. I mean, they can get like the monthly pass for $20 and go see like 3 movies a week or something. Anyway, they're thanking their stockholders and people buying their stock, and I thought that was very interesting, which they should, which they absolutely should. So Linea is a layer 2 network on Ethereum, and there's a protocol chain called Velocore. Well, they paused transactions on Linea after there was an exploit of $7 million on Velocore. And so why is this significant? Because Linea users who have bridged around $1.2 billion to the chain couldn't do anything with their assets while the blockchain was paused. Why is this concerning? Because it's a centralized network. So essentially, the creator controls the network. And so if you are using these networks, you should know that this is a benevolent dictatorship or benevolent king or whatever they call it, right? If you have a network that is centralized and that you can pause transactions, Linea and the CEO or whoever's, in charge of all this, they can do whatever they want with the $1.2 billion on chain. That is a far cry from decentralization. That is a far cry from financial sovereignty. That's a far cry from holding your keys and your coins. Just be careful when you're using these networks. Understand, can things like this happen? Can they pause a network? Can they freeze your funds? Now, if you got hacked and you wanted your coins back, this might be a good move. So, to each is their own. But if you're curious about the ethos, maybe getting rugged, this is how you get rugged. Nearly 500,000 tokens were launched on the Solana blockchain last month. Yes, tokens were launched on the Solana blockchain, 500,000 of them. So there's 500,000 new shitcoins out there. Well, about 177,000 shitcoins were launched on Base. Optimism and Arbitrum saw only about 20,000 new tokens. This is good, kind of. I mean, the cost of experimentation and new idea creation is near zero. So if you have an idea and you want to go try it out, go to Solana, try out some tokens, launch the tokens. Now, the thing is if you're investing, know that there was 500,000 tokens created in a month. So how many are actually worth something? How many people are actually working and know what they're doing and have any clue what they're doing? Probably very few. But if you want to get that new meme coin, like the Caitlyn Jenner coin or the Iggy Azalea coin or the Rich the Kid coin, they all launched tokens on Solana last month. And finally, good news, but kind of inconsequential to the number go up, but it is just a little, more validation of Bitcoin. Thailand approved launching the first spot Bitcoin exchange traded fund, growing the list of countries embracing regulated Bitcoin investment vehicles. But here's the thing, it's not for everybody. It's not to retail investors. It's only to wealthy and institutional investors. The One Bitcoin ETF fund is scheduled to be distributed between May 31st and June 6th. So that's like now. Speaking of now, let's take a look at those crypto prices now.
Here comes the money.
Here we go. Money talk.
And the time is 10:10 a.m. Eastern Daylight Savings Time. Fear of greed is at 62. We are greedy. Bitcoin sitting at $69,922, up 0.2% in 24, 3 and 7. We're going to cross that $70,000 mark. I think we were there yesterday too. Ethereum's at $3,785, down 1%. Tether's number 3. Binance is at, whoa, why did I miss this? It's at 656, up 3.4% or almost 10% in 7. And Solana is at 166, up 0.3% in 24, but down almost 2 in 7. I want to go back to Binance really quick. This is one of those situations where, the regulators and a lot of scrutiny on Binance US started coming down, where there's probably a lot of hodlers of Binance BNB token, and numbers going up. And so a lot of people didn't feel comfortable with Binance not having the on and off ramps to your bank account, only trading in cryptocurrency, on Binance.com, on Binance.us. And they didn't feel like, I have a method or a secure method to hodl trade my BNB. So probably people divested back, when Binance was, $200. And now it's almost $700. So because of these regulations and this uncertainty, somebody missed out on a lot of gains. And that really sucks, right? And I just wanted to point that out. Running off the top 10, we have USDC, XRP, Dogecoin, Toncoin, and Cardano's back in the top 10. The total market cap is sitting at $2.58 trillion, a Bitcoin dominance of 53.2, and an ETH dominance of 17.6. And that was our show today. I'll be back tomorrow. Tomorrow will be Wednesday the 5th. And until then, happy hodling, everyone.